Hello and welcome to the Pipnotic Symposium for the 30th of August 2017. In this symposium we are going to talk about the new software, and we're also going to have a look at some pairs. And before we get started, the most recent version of the software, which is, let's have a quick look. It is 1.651. is the latest build, and all previous versions, so versions less than this, will stop working at the end of the month. And so the newest version, which is this one, will kind of be the new stable release that we'll all be using from now on. And this piece of software is good because it'll enable me to give you update notifications just up here. So when I issue a new update, you'll get a little message just up here that'll tell you that the software needs updating. So when you see this up here, then go to the download section in the members area and download the latest version. So the next one, of course, be 1.652, which will come out probably, I don't know, within a few weeks or a month or whenever. But the main reason that I wanted to introduce this version was, first of all, to include stuff like this, where we have a nice version of untested fresh demand. Here we have another area of demand, but this one has been tested. You can see it's been tested just here, and so I wanted to help differentiate between fresh areas and non-fresh areas like this one and this one here. So I mean, this morning I got this trade here. I bought at the 12900-ish area, and I got out just below this area here. So maybe you can see it just here, so just below this little candle just here. And this area here was also fresh until price poked into it, and then the indicator made the area non-fresh by changing the border of this rectangle, as you can see here also on the 30-minute chart. You can see we still have a fresh one here, which is the one just here, which is actually the child, the parent being this one here. So this child area of demand is still fresh, and we have nothing that is fresh to the upside. And so this is the main modification to the functionality, and also is the update notifications, which you'll see in the upper left corner just here. And so when I issue an update for this indicator, we just changed time frames, I've just changed it now, you can see here that we have update available, and it tells you which version is the most recent version here. And this is the one that you will be able to access in the members section. And I'll change that back. There we are. So now it's gone. And so that's that. So a really good version, an incredible performance enhancement in contrast to the previous version. So I think you'll really see tremendous value in this one in particular. And when you install this indicator, you have to go to the tools menu, and then you go down to options. Then it'll bring up this box here, this options dialog, and you have to ensure that allow DLL imports is checked, because the indicator is making requests to the Pipnotic server to query update information. So this has to be a check for this to happen, and if you don't do that, then the indicator simply can't run. So just ensure that this is done, and then everything should be hunky-dory. Good. Okay, let's have a look at a few pairs. I just want to show a couple of trades that I'm currently in. You can see I'm in this one here, which is just a really nice area. How we had price left, we went up, we accumulated, then we left really aggressively, and price had not been back since. So price managed to come back to this area here, but it had not been into this little piece of uncharted water here, this price level, so above this high, and price poked into the area, and I sold just up here, and I'm expecting price to run down to around the highs here before we continue either higher or lower. But the reason that this area is interesting is simply because of the release price. We left, we accumulated, we went up, we accumulated, and then we left again. And you can see that the sheer power in this move is, I mean, there's a lot of selling going on here to cause this to happen on the 4-hour chart. An incredible amount of selling. And also, where it's located is very important as well. You can see we had an equally important move here and an equally important move here. and this one is actually really big. But why didn't price respect this level? We only had a tiny reaction here when price came back to it, and this is simply because price had already been back to this level here. It actually been back to this level up here. So you have to look at the price, kind of the structure of price, and what leg, what price inefficiency price is currently hanging on, and it's this one here. And so price, when it left here, price was out of parity, and if price needed to return to parity, it'd have to come back here, because this is where price would kind of complete its cycle. And so if you look at this one here, you can see price kind of barely poked into it, and then it went through it. And that's because price had already cleared out the pools of liquidity up to the high of this level here. And so this was the obvious next level that we would look to sell. So we're not going to be taking any of this stuff in here. We're only going to be taking the higher probability areas, which is here, just up here. We had another trade on the pound this morning, which was this one here, where price, we rallied, accumulated, we gapped up, we tested this area. This is a gorgeous setup just here. We came up here, we accumulated, and then we left. And so this whole price structure here was standing on this price inefficiency, this price imbalance. And for price to return to parity for this, it'd have to come back to here. So we bought here, and we got out at the opposing area of supply, which was just up here. So we got a pretty nice trade out of there. So that was a really nice position. And so now we're currently in this one here, and we have a few others that we're waiting for. Let's see if you can see my screen. Yes, you can. A few here, kind of on these different pairs here. We have quite a lot going on, as you can see, and so I'm going to just wait patiently for this. Hopefully it'll materialize. If price manages to come back up here, we're seeing strength, maybe on the strength indicators, then I'll reassess and see what's going on with perhaps the data releases, because maybe we have some bullish, some demand for the euro and supply of the Canadian dollar, which of course is going to drive this price high, which we don't want. So we want price to break below. We go to the smaller time frame. We want price to break below, like this thing, update. We want this price to go below here. We have this little area of accumulation. Price is testing. I want price to go through there. If price goes through there, the next obvious level is going to be just here. This is like a micro demand, of course. So when price comes back down to the 14900 area, I'm expecting it to have a bit of a reaction there. But you can see price is having a tough time there. It's been tested once, twice, three times, and now the area is actually gone. And so I'm hoping that price will come back down here. But you can see this price structure is actually hanging on this price inefficiency. So it wouldn't surprise me if price did come back up to here and rebalance that price inefficiency around here at the lows, the 150.32, before it continued lower. But we'll have to wait and see. I'm hoping it doesn't. I'm hoping it comes back down here. If it starts to drift higher above that, if we start to move above these highs, or maybe take out this small continuation pattern here, then I'll have another look at this and see what else we're going to do. We also have the big figure just above price around here. Oops, sorry. And so ideally I'd like price not to go above there. We'll have to wait and see. You can see price seems to be supported for the time being. There seems to be a bit of demand down in this area here, which we can see very clearly here. But we'll have to wait and see what happens. So fingers crossed. The risk is out of the trade, so we just have to wait and see how this thing materializes. I'm going to also have a look at the data release. If we have some big news coming out of Canada or Euro today, then of course it's going to affect how long I'm going to sit on this trade. Okay, good. So what I want to do today is I want to go over kind of the framework that we use when we're trading supply and demand, because we have a couple of new guys in here. Okay, just had to find the slides there. And so this very simple method that we can look at to trade. It's kind of an overview or a procedure that you can follow, a series of steps that you can follow to help you find the areas of highest probability. And I did this presentation on FX Street last month, and so I'm just going to kind of run through the highlights of it as well, because it's quite an interesting method to follow. But so the process looks like this. We identify the trend, we find the origin of the current move, And then we ask ourselves a series of questions which enables us to find the areas of supply and demand that we think that price is going to react on. So if we start off by identifying the trend, so you go to the time frame, which is your trading time frame. So if you're a longer term trader, this might be the weekly chart. If you, maybe it's the daily chart or the 4 hour, it doesn't matter, whatever. We'll choose the 1 hour chart for this, and we are going to ask ourselves a very simple series of questions. So here, for the trend, we want to see at least 300 periods. I like to see, this is good. Here we have 420. This is great. I like to see a lot, because then you have a really good idea of what price is doing. And what I'll do is I'll even, I'll click up to time frames that are above what I'm interested in, just to give me an overview of what's going on. And you can see that the price is wriggling lower. So we have a downtrend on the 4 hour chart, and we are actually reacting at 4 hour demand. So this is important to know here. So if we go to a longer time frame, you can see that, go to the weekly chart, you can actually see that we are struggling with this here. So if we take kind of the highs there, we take this whole area of demand, you can see that we are testing weekly demand. What does that mean? Well, that means there is an awful lot of buying going on in this area here. And so looking at the approach to this weekly demand, you can see that we have price at disparity. What does that mean? Well, that means price is likely going to want to return to parity before the fundamental drivers push price higher or lower. And you can see that this is one big price imbalance here. We have a few pauses along the way. We have this one here. We have this one here. And these are very important, and certainly areas that we want to be mindful of when we're trading. And so keep in mind that price is moving down. On the weekly chart, we are in an uptrend. Important, so you want to be buying a longer term. Go to the daily chart, you can see that we're actually looking like we're in a downtrend. On the 4 hour chart, we are also in a downtrend. And on an hourly chart, we're also in a downtrend. But if you go to the smaller time frames, like the 50-minute or the half an hour, you can see that things look pretty sideways here. You can see that we're actually starting to challenge areas of supply, which tell us that the price is potentially going to start wriggling north from here. And this you can simply see by the X boxes in the past. You can see that we have currently this area of demand below price, and we have a couple of X's that have been formed to the left here above price. So this tells us that price is wriggling higher. So it's really important, even though you're trading on perhaps a 50-minute chart, or you're scalping on the 5-minute or the 1 minute, it's a really good idea to have a quick glance at the longer periods, just so that you know what's going on. The weekly chart, price is looking to move higher. We are testing this area for the second time, and so we could potentially move a little bit deeper into the area. But I mean, we have major swing lows being taken out, and we have areas of supply being formed above price. So price is probably going to have a tough time moving through this and this. So keep that in mind. So what do you do now? Well, you can see here the price is starting to react on that. What does that mean? Does that mean that you want to be buying or selling? Well, that means that you can sell, but you will be selling into weekly demand. And that's fine. That can also work out, but you just have to be aware that that's what you're doing, because this is obviously going to affect the way that you want to manage your trades. But if we look at above price, you can see that we have this whopping great area of supply here, and a little bit further up we have this one here, which is also a really nice area of supply. This is the weekly supply that we saw on the weekly chart. And for those of you who are new to Pipnotic, you can simply see what time frames these areas of supply and demand have been drawn on or qualified on simply by looking at the colors. If you go to the indicator and you have a look, you go to the inputs, you go down, and you can see monthly levels are dark violet, purple, weekly levels are orange, daily are red, 4 hour are blue, and so on and so forth. And so I've color encoded everything to help you be aware of this even when you're on the small time frame. So here we are on the 4 hour chart, but we can see that we have weekly supply above where we are. And I actually like this here. I really like the way price left, which is why the indicator has qualified an area of supply just here. And also, if we consider just for a second the depth of the curve, so if we go from the high, this is the origin of this move, go from the high to here, you can see that 38% is just here. So this is the earliest, this is the cheapest that we are going to sell at. Selling here, it might work out, but it's lower probability. Why? Number one, we're reacting at weekly demand. Number two, we are forming higher lows. And number three, this is really low. This is maybe at the 23%. And so ideally you want to wait for price to come back to the deeper areas of supply that are significant on the larger move, which we can see here and here. Okay, so we'll have a look. Let's have a look at the slides. So we've identified the trend. If you're trading the 4 hour, you can see we're in a downtrend. We're taking the information from the weekly chart down to our trading time frame, which is this one here, and so we know that we will be selling into weekly demand, which is very interesting information to be aware of. Okay, then you find the origin of the move. So the origin of the move is the one we just looked at, which is just up here. And this is interesting because if price managed to reach this high here and move all the way down from this, so price moved, it moved 1400 pips, then there's going to be a lot of selling up here. What does that mean? That means there's a lot of supply just up here. So there's a lot of people looking to sell when price came up to this level here. And so go back to the slide. And so ideally, if you want to identify the big moves, the big turning points, then you mark off your area like this, which the indicator has done for us. The area has not been fresh, so it has been tested once, which is why we have a dotted box like so. And then you scroll left to find out what it is reacting on. So if we uncheck that and we have a look here, you can see that we're actually reacting to this just here. So what we saw, so this is not, this is actually the filling of orders. This is not supply, this is the filling of orders. And so price is wriggling up into here. We poke into the area, we start to fill orders, and then price dumps lower. We wriggle a little bit higher, we find more liquidity, and then this is what caps price. And so you could take a short up here and put your stop into this area of supply, which is deeper. So the parent, this is the child, this is the parent, and your stop would have to go kind of into this uncharted area of bearish supply here, or bearish liquidity. But you can see also that we have a few areas down here that are also going to work out, I think, if we consider where price currently is. So I mean, a good area to trade would be to have an attempt at selling up here if price manages to get up here, or waiting for price to reach an area of supply that is still untested. And we have something just up here, as you can see, just here. So we have an area of supply just up there, untested. On the smaller time frame, this is going to be very clear. Let me turn my phone off, because you can see that this is actually reacting to this. So this is not fresh supply, but if you look up, this is fresh supply. So on the 4 hour chart, we have fresh supply just here. I like this area very much. Price is hanging on this price inefficiency. It's gone all the way down. We've made all of these areas of supply below this one here, but this is a fresh area. So when price comes here, it's probably going to have quite a bounce and continue to move lower from here. So this is if you're really patient, but if you're not patient, well, then you can also look at these areas which we identified on the time frame, which is a longer term, so the weekly. And so you can look to have a stab at this, something in here, or somewhere up here. But you can also, you can have a look at these as well, because if you are trading shorter term, you go to the half an hour chart, well then these areas are going to be very very interesting as well. We have this one here, which has almost been tested, so I wouldn't believe too much in this one here. Also price, if you look at this one, this is actually testing this. So this is a child, this is the parent, and above that we have this one here, but price has already been back to the high of this here. So price has already attempted to move higher since this move lower here. So this is actually the cheapest that you would want to sell at, so the 12600 area. And so we're going to want to go and have a look in here and find the area of supply that price is likely to react at next time. So if you want to go micro, go to the smaller time frame, you can see that we have something in here. Let me zoom in a little bit. Just here, we've got something just there. We go to the 5-minute chart, and you can see it just here. This is perfect. Like that. Still untested. Price came pretty close. We touched the bottom of it, but it's still untested. So if you zoom out a little bit and you have a look, you can see that price came pretty close to it, but it didn't really manage to get up there. So the one around the 126.08 is a pretty decent area if you want to consider to try and sell there. Alternatively, you can look higher. So let me get to the 4-hour chart, and you can see that we have something up here. So this is the one closest to price. You could argue that this has been tested once, twice, which would lower the probability of this trade working out. If that's the case, if your assessment results in you thinking that this is a tested area of supply, which it technically speaking is, well then that should bring your attention to this area just here. And so then you would perform your analysis of the area. Sorry, jumping around, me find the area. Good. So this is the candle that left. Is this an accumulation candle? Yes, it is. Is the body of this candle within the range of the previous? Yes, it is. Is this an accumulation candle? Yes, it is. Is the body of this candle within the range of the previous? Yes, it is. Is this an accumulation candle? Yes, it is. Is the body of this candle within the range of the previous? No, it is not. So our area of supply would be from the low here to the high here. And so we would look to sell at the low just there. So we zoom out like that. And this is what we're looking at. And if you want to get a little bit conservative, which is how I like to go, you could opt to trade that there, kind of move it to the bottom of the lowest body, because these two are they look pretty related, and this one kind of stands out just a little bit. Under the platform, these two candles may not be related, so you could either do this or you could do that. And I'm going to do this. I'm going to put my stop about 5 pips above. Fine. I'm going to zoom out, and then we're going to put that order on and watch it do something just there. So let's see what happens there. So I'm going to leave it in there for about 12 hours, then it's going to expire, because if it's still in there after 12 hours, then I want to know, because sometimes the sentiment can change, and then I don't want to be in the trade anymore. So I'd like to have some time, let it go for a while, and then I can reassess once it expires. So the 126.46, 126.46. So I'm going to sell that. Let's let that fill, and you can see that we're probably going to get a reaction just here as well. A small reaction, but this has been technically tested a couple of times, so this is a lower probability. But if you want to capitalize on the fact that price has indeed reached this weekly demand, well then you can certainly do that. And then you first of all realize that we are at weekly demand, and then go to the smaller time frames and find valid areas of demand that look pretty good for trading. And you can see on the 50-minute chart where we have this area just here, we have this green candle, which I like. So you start here with your analysis. Is this an accumulation candle? Yes. Is the body of this candle within range of the previous? Yes, 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 so this area would actually look like this. Now I'm not going to put this trade on because it's a little bit, it's on a smaller time frame, which I'm not a big fan of. But I'm going to leave that on, and we can have a look at how price reacts once it gets there. You can actually see that, I mean, price has already gotten pretty close. Sorry, price, actually, let me see. This candle here, the body of this candle is actually higher than the high of this candle. So the area would actually be exactly how the indicator has drawn it, the software. So I'm going to leave it like that. Like so. We'll put our line in there and we'll see. If it gets wiped out, it's probably because of the news. So we'll leave that in there and see what happens. But I'm not going to trade that one because I mean, it'll probably work out, but I prefer areas from the bigger time frames. Okay, so we found the origin of the move, and this is important because if price is able to move, as we looked at, 1400 pips, and there's probably a bunch of supply at the top there, so that's where you want to start your analysis. This is a whole thing of identifying these big swings. You can, let's find another pair, and you can do this on absolutely any time frame you like. We can go to the 50-minute chart or the half-an-hour chart. You can see, I mean, what's the trend here? Well, the trend is actually sideways. So is that good or is that bad? Well, I mean, it doesn't make me want to trade it. I don't like sideways price. But if you look at bleeding edge, which is only a little bit of price, you can see that we have this area of demand. So again, zoom out to the bigger time frames and see what's going on, and you can see that we have this area of demand here, which has been respected, it's been tested once here, and price is reacting and is left from that. And so you can see that we're making new highs, fresh highs. There's a lot of rejection down here, so there's a lot of liquidity to buy down here. And so keeping that in mind, yes, while we are in a downtrend on this chart, if we zoom out as we did in the past, you could see that we are actually in an uptrend on the 4-hour chart, and we are reacting to this just here, which is not a very pretty area. It's pretty congested, but this is pretty much where we're testing. We've just tested the highs roughly, which is pretty much where price came to, actually, to the pip if we take the high, and this is where price departed from. And so keeping that in mind, you go to the smaller time frame, and then we look for fresh areas of demand below where price currently is. Before you do that, you want to have a look here. You want to make sure that price isn't reacting on something major above where we are. So if we put a line on the highs and we go back, see, price is kind of just challenging these highs, and this is not very pretty supply here, so I wouldn't have any reservations about buying into this at some stage. The first real fresh supply we have, this is not well structured. This is a child, here's the parent, and this is a fresh supply here. So I'd be selling at a price no cheaper than this. So if we zoom out a little bit to the hourly chart, that puts our entry, all the way up here, which is pretty far away from price. So the area of demand that we could look to buy is somewhere in here on the 50-minute chart, and you can expect price to go, we're probably going to have a bit of trouble when we get here, like these children. We have the youngest, it's like the youngest child, the middle child, and the oldest child, and we have the parent kind of up here in the so that we've just tested just here. And so you want to go to the smaller time frame and have a look at some nice fresh areas. And if you look at this here, you can see that, price accumulated for a while, we rallied, accumulator rallied, price fed into the accumulation, we tested it once to the pip, and we left at the big figure. And so price is probably going to come down to at least the 8700 area. I actually wouldn't be very comfortable trading this level here because price has been back to this, and so this is the earliest I would take a buy, and I wouldn't even take it here because it's been tested once before. Which brings our attention to this, and this has a lot of accumulation. What does that mean? Well, that means that we have a lot of agreement in supply and demand. So I would actually not consider buying until price got down to here. This is the cheapest. So this is the most expensive I would want to pay, expensive price I want to pay for this. And this is not even a very good area because price didn't leave like it did here, which is why the indicator hasn't marked it off. So this is a pretty mediocre area to buy. So if we move on, we've been walking through this an awful lot. Has price been back there before? And this is where this comes to, where you look at this. This is not demand. This is a reaction to demand, which is here. I'll put that back on there. Just we follow the method. Then you ask yourself, is this a parent or a child? Well, this is a child, and here's the parent. So this is the absolute most expensive price, the 87.06 that you would want to pay for this. And when price came there, you can see it didn't leave in a hurry. It kind of just like meandered around here and then finally released to the upside. So this is not a very good level either. And so this is going to help you identify those questions. You have to keep looking for those areas where you have those really nice reactions. If we have a quick look here, drawing areas of supply and demand, you have current price, and for supply, you have what we refer to as a proximal line. And this is just, these aren't trading terms, these are just like common English terms. We have the proximal area, which is the area that's closest to price. Then you have the distal, which is furthest away. And so the proximal is closest to price, as you can see, and the distal is furthest away. And all that means is that if we consider this for a second, we have the proximal line, which is here, and the distal line is the edge of price furthest away. So because we're buying, proximal closest to price, distal furthest away in the area of accumulation. So it's like that. So it's pretty simple. If you want to draw it, you simply do it like that, as we've just illustrated on that one. So here we had demand, so you'd draw the rectangle from the high of the highest body in the area of accumulation down to the lowest low of demand, which we've done here. So we had the green candle that left. We have 1, 2, 3 periods of accumulation, and the lowest body, so the highest body is here and the lowest low is here. So the reason I'm not taking it like this is because the body of this candle is not within the range of the previous, which tells us that these two are not related on the smaller time frame. So if we mark it off like that and we go to, let's say, the 5 minute, you'll see that these two are not related. So we go like that, you can see that, let me zoom in, you can see that we actually have, okay, the indicator found it for us. We actually have this one here, and this candle is not related to this one here. So this is the lowest body, so the highest body of accumulation and the lowest low. So this is a pretty decent area, and I like this much more on the 5 minute chart than I do on the higher time frame, simply because on this time frame price managed to leave pretty aggressively, which is again also why the software managed to qualify. So I like that one, and I think I'd probably trade this as 5 minute demand more than I would 50 minute or half an hour demand. And you could simply mark it off like this, a few pips below the low, maybe put it like that, and kind of be done with it. You can see here the price has already been back down to this level here. Price moved down here, and so this is definitely the most expensive price that I'd want to pay for this. But I like this one here, and we can see what price does when it gets there. But that's an okay area down there. So we've marked off our area, and then you now have to look at the quality checklist for the area of accumulation. First of all, how did price leave the area? If you look here, how did price leave this area of accumulation? It left pretty well. We had 2 green candles. We had another couple of candles, one of which was accumulation, but the wicks aren't terribly big. Excuse me. On the bottom edge of these bars, we have small wick here, no wick, small wick, no wick, and so there's a lot of interest in buying and not a lot of interest in selling. And so I like that quite a lot here. Ask yourself the question: how far did price go when it left accumulation? Well, you can see, the algorithm in the software states that it has to go at least 3 times the size of this. which it did, and it has to do that within 3 bars. So by the time this candle closes, price has to leave. Price has to have moved. Let's see if I can find it. No, won't do it. Price has to have moved at least 12 pips, which it did. It moved about 13 pips. So this one has been qualified. So if you're trading micro areas of supply and demand on the smaller time frames, I mean, this would be okay. And I mean, here's a really good example here, which I like. Price rallied, we accumulated for 2 periods, and it left. And you see there's no wicks on the bottom edges of these candles. That said, there's no selling, there's only buying. So we had solid buying, pretty good buying, and then price started to slow down. So price poked into this area here, and price left. This is a really good area. This is less good because there's a lot of trading in and around this area here. This is a good one, and this is less good, but maybe going to get some kind of a reaction in there. How long did price accumulate? Well, price accumulated for 1 period for this micro pattern here. Price accumulated for 2 periods here. So I like this one. I like that price tested the area, came back down, it rallied up, it accumulated below this price level, and then it jumped above. This is really nice. I like this, very good. And this one is less clear. You can see the price has kind of been in the area for quite an extended period of time, which I don't necessarily like. Has price been back to the area? No, it hasn't. And until price did come back, this was a nice fresh area of demand, but now it's tainted, and so we're not expecting this. Well, it can hold again in the future, but it's lower probability now because it's already been tested once before. Good. And then how far has price had to travel to reach the accumulation? And this is what we looked at on the, I can't remember which pair it was, but if we look at, let's stay on this example. If we have a look at the swing, assuming that this is the low here, let me zoom out. If we consider this as our swing, you go from the high, I mean, how far has price had to come? Well, it's had to come to the 50%. So this will be a test of the 50% Fibonacci retracement. And that's normally the shallowest I'll want to trade. I rarely trade the 38. I'll go at least 50%. So I want to see this one or lower. This is simply because, I mean, this is a pretty bad price if you're looking to buy. And the lower you go in the curve, the better the price, the better deal you're getting. So here you're getting it at a pretty mediocre price, okay price, pretty good price, and here we're getting like pretty good wholesale prices when you come down low here. And so you buy it here and you sell it back a little bit further, and you're buying it wholesale and you're selling it retail back up here, which is actually what you want to try and do. So you want to be paying good prices for these. It's just like bicycles. Would you rather pay full price for a bicycle, or would you rather buy it at a discount? This is full price up here, and this is at a discount down here. So below the 50% is discount prices, above is full price. And so of course you want to pay as little as possible for this security. Yeah, and that's pretty much it. And so it's a pretty simple method, and I think that if you follow it, you'll be doing pretty good. So if we do a quick recap, zoom out, what's the trend doing? Are we moving down or are we moving up? Here we're moving down. We'll have to go to the 4-hour chart to find the swing, and the swing is here. It starts here. So this is the, oops, wrong thing. We're going to take the Fibs tool, go like that. Okay, so here's the 38% retracement. You can see that we're in a downtrend on the hourly chart, and you can see that the area that you want to focus on is this one up here. So this is where the real supply is. So this could be a parent, but it could also be a child if it's reacting to something back here historically to the left. Then you start from there, and then you start looking for well-formed areas of supply here that are closest to price. Obviously you take the ones that are closest to price, but they have to be well formed, they have to be at a reasonable area in the curve. And we had We have this one here, but this is way too early on. And you want to look a little bit higher. Where else do we have areas of supply that look pretty okay? Well, we have this one here. We have something going on there. There's probably something on the smaller time frame. We have a look. You can see this is what it looks like on the smaller time frame. You can see this first test back here tells us that price has already been back to this level since it left here. So this is uncharted waters. This is the obvious area of supply that we would want to sell at. And then you start looking at the quality checklist. Is this a well-formed area of supply? Not really. You can see how price has been trading there an awful lot. And so this is not an ideal area that you would want to look to sell. So you're going to have to keep looking left to find that really good area. And you don't actually see that until you get up to here. Here we have one, which I like. Let's remove the fibs. And this is pretty close to the top, which I like. You can see price has already been back to here. This is untested. We have a couple of other areas that are untested, but price has already been back to this price level here, because when price goes up, it clears the road of the pools of liquidity. And so you want to wait till price comes up to a price level that it has not yet been on a pullback since it came down. Okay. Well, I think I'll leave it at that. We have a couple of orders in there, so we can wait and see what happens. We have actually quite a lot of orders. If we apply the template, if we have a look at some of these, you can see that we have here. You can see that we have price left, and now so we're in a downtrend on this time frame on the hourly chart and on the 4-hour chart. So for this swing here, I take the high to the low, go back to the hourly chart, and then we'll see where we are in the curve. Where is this area? This is actually the 62% retracement for this. So this is the origin of this move, which is what we can see on the hourly chart. And this is an untested area of supply, which I like, because when price left here, it left in a real hurry. We accumulated for 2 periods. We have a small continuation in pattern here. So price rallied, accumulated, rallied, and then left. I like this one very much. So I'm pretty confident that price is going to have a bit of a bounce once it gets up here. And move this to like so. And so I like this area quite a lot. I wouldn't take anything in here because price has already kind of cleared out the pools of liquidity here since this. And so you can go on the smaller time frames and you can buy until you reach the real liquidity, which is going to start here. We have one here. We also have a really nice one here, and then we have a couple of small ones just above price here. If we move this, you can see that this is decent, and this is also decent, and this is still imbalanced. When price returns back to this level here, this little price structure, then price would have returned to parity for this move here. And so the next move that needs to be rebalanced is probably the approach to this area of supply. So when price rallies up, it's probably going to leave a price imbalance in its wake, and this is where your profit target will be. So if price rallies, accumulates, and then rallies, this is where the target for this sell is going to be. It's going to be opposing demand, and then you would take your profit there, and you would expect price to move higher into this one here, and then you would trade that one. Okay, I'll leave it at that. I hope that wasn't too confusing, kind of rambling on there for a while. But if you have any questions, I will certainly get to those. And there's a gentleman that sent some trades, and I haven't gone over those this session. That's because of the software update. I wanted to cover that. So I'll respond to your emails simply as a response to your email. So I'll comment your trades directly to you. Okay, I'll leave it at that. Thanks for watching, and I will see you all soon.